French connection that I've had now for quite a while. I bought that stock when it was trading at 37 pence. It was then had a working capital position of something like 57 pence with an NAV of 72. It had all cash and all of that. The company had gone through a bad time, which was really self-inflicted, that overexpanded in Asia, particularly in Japan, and weren't making much money in America. The owner of the company, he is the biggest shareholder in it. He had gone through a very expensive divorce case and had spent most of his capital on that. And his last big capital holding was his shareholding in French Connection. He was getting up to the age where he would be thinking of retirement. And I was convinced, having spoken to management, that that was the one thing that he wanted to do. I thought at 37 pence that there was very little risk in this company, which has been very profitable over years. I knew that the retail environment was difficult, but this was very much a case of self-help. We bought the stock, and last year we sold part of it at 120, so it had traveled nicely since we bought it. It has now trickled down that we bought it back at 33% of the price that we sold it at, and that is one of those examples that I work with. But what's the interesting bit about French Connection is that they always have the premium sites wherever they are. And even though we have just come through a very bad recession and an ongoing recession in the retail sector, their stores always attract premiums on their leases. And that gave me the confidence that there was some value in it, i.e. that it wouldn't come back to hit them in one go. They may have problem sites, but that was something that they could deal with. But that is obviously a very important point to remember, investing in a retailer, what their estate looks like.